Now to interest rates. St. Louis Federal Reserve Bank President James Bullard said today that a rate cut may be warranted soon. That's a quote. Bullard cited global trade tensions and weak inflation in the U.S., and many on Wall Street seem to agree the interest rate futures markets has already priced in several cuts this year. But as Steve Liesman tells us, the street is also looking at something far worse.
Several forecasters are now convinced that the U.S. economy is headed for recession as a result of existing and threatened tariffs from the Trump administration. Citing rising trade protectionism, forecasters responding to a new survey from the National Association for Business Economics put the chance of recession next year at 60%, up from just 15% this year. Morgan Stanley wrote in a report, quote, "If trade tensions continue to escalate, we believe that the global cycle will be at risk. We could end up in a recession in 3 quarters." Even the president's own economic advisor, Kevin Hassett, indirectly suggested the new tariffs on Mexico would hurt the U.S. economy.
I could say that if folks out there are tuning up their models to really work on it today, I think that one of the things you see is, especially in the near term, the impacts are much larger on Mexico than on the U.S. And I think that the intent of this is to solve a very, very important problem that the president's focused on.
And the consensus has quickly changed from no interest rate cuts this year from the Federal Reserve to general agreement for multiple cuts as bond yields have fallen sharply.
You look at the 10-year, 2.10 in round numbers. You look at the obvious reversal of the outlook for the Fed in terms of market expectations. Those are all bearish signs.
Altman's company Evercore said in a report, quote, "We now see a base case in which the Fed will reluctantly cut rates 3 times starting in September. Markets now price in the chance of a rate cut as soon as July and agree with Evercore that multiple cuts are on the way." The question is whether the Fed is ready to meet market expectations and cut interest rates so soon after saying it was on hold for an extended period. If it does, markets have to wonder if rate cuts are the right economic answer to tariff hikes. For Nightly Business Report, I'm Steve Liesman.